Hi there, and welcome to the Property Wealth Podcast. I'm so glad you're joining us today.
Yeah, it's great to have you here.
You know, with rising material costs in 2026, it's super important for real estate investors to find clever hacks to keep their projects profitable.
Absolutely. Navigating those costs can be a challenge, but it can also be an opportunity to get creative.
Right? And today, we're going to dive into some practical strategies that will help you manage those expenses and maximize your returns.
We'll talk about everything from sourcing materials at a better price to leveraging local resources and even how to find skilled labor without breaking the bank.
And let's not forget about the importance of budgeting and planning ahead to avoid those last-minute surprises.
Yes, planning is key. We'll also share some real-life examples from our experiences that can really help you think outside the box.
So whether you're a seasoned investor or just starting out, there's something here for everyone.
Exactly. And, it's all about building that long-term wealth, right?
Absolutely. All right, let's get into it.
Sounds good to me. Let's start with some tips on sourcing materials. So, when we're talking about material cost hacks in 2026, it's really crucial for our listeners over 40 to understand why this matters right now. I mean, retirement is just around the corner for many of them.
Exactly, Mike. And with the way inflation has been creeping up, it's more important than ever to think about how to protect their investments, right?
Absolutely. I've seen so many investors, especially those who are nearing retirement, feeling the pressure of rising costs. It's not just about the current market, but also about planning for the future. If they're not careful, those material costs can eat into their profit margins significantly.
Right, and it can really derail their plans for financial security. I remember a client of mine, let's call her Jane. She was in her early 60s, looking to downsize and invest the profits from her current home into rental properties. But, she was shocked at how much prices for materials had jumped.
Yeah, that's a classic scenario. Jane had to rethink her strategy. Instead of going all out on renovations, she started looking into cost-effective upgrades, things that wouldn't break the bank but would still add value.
That's smart. And it's a good reminder that we can't just rely on the old ways of doing things. For someone in Jane's position, every dollar counts, especially when you're planning for retirement.
Exactly. And then there's the emotional aspect as well. When you're over 40, there's this heightened sense of urgency to secure that financial future, to feel stable. We want to make sure our families are taken care of, that we can leave a legacy.
Yes. I think about how important it is for them to consider the wealth transfer to their kids or grandkids. Investing wisely in properties not only creates cash flow, but also builds something tangible that can be passed down.
Right, and with the current economic trends, it's vital to be proactive. If they're just sitting on their hands, waiting for the market to change, they might miss opportunities.
Like that story about Tom, who invested in a property in a neighborhood that was just starting to blossom. He got in early, and now, several years later, he's not only got a great return, but also a home that his kids can inherit.
Exactly. Tom's foresight was key. The sooner they start thinking about how to manage costs and maximize their investments, the better positioned they'll be, especially when it comes to navigating market shifts.
And let's not forget about the stress that comes with financial insecurity. Living with that uncertainty can be really draining, especially as you get older.
For sure. I've spoken to many investors who mentioned how much peace of mind they found simply by securing their financial situation through real estate. It's like a safety net,
Yeah, and that sense of security can really change how people approach their golden years. Instead of worrying about bills or unexpected expenses, they can feel empowered to enjoy life and focus on what truly matters.
That's a great point. And with the current trends, we're also seeing a shift in how people view real estate. More and more, it's seen as a reliable hedge against inflation.
Absolutely. Properties tend to appreciate over time, while other investments might be more volatile. It's like a solid foundation in your investment portfolio.
And it's not just about the appreciation, either. Rental income can provide a steady cash flow that can help with retirement expenses.
Right, and that's where the cost hacks come into play. Being smart about material choices, renovation strategies, and even financing options can make a huge difference in cash flow.
Definitely. And that's why I always encourage investors to stay informed about current material costs and trends. The more they know, the better equipped they are to make decisions that'll serve them in the long run.
And it's not just about the numbers either. It's about feeling confident in their choices. Like, if they know they're getting good deals on materials, they can tackle renovations without that nagging worry of overspending.
Right, and it's all about creating a plan. When you have a strategy in place, you can approach investments with a clear mind, rather than reacting to market pressures.
So true. And for those who are feeling overwhelmed, it's completely normal. But taking those small steps, like researching suppliers or exploring alternative materials, can lead to big savings over time.
Yes, and even just connecting with a community of like-minded investors can provide support and shared knowledge.
It's amazing how much you can learn from others' experiences. Just hearing someone say, I found this great way to cut costs on my renovation, can spark new ideas.
Exactly. And that's why I always say, stay engaged, keep learning. The real estate landscape is always changing, and those who adapt will thrive.
So, as we move into some core strategies that can help with cost saving and optimizing investments, let's keep that in mind. It's about empowerment, security, and building a sustainable future.
So, let's dive into some core strategies that can really help in managing those material costs effectively, especially in 2026.
Yeah, definitely. I think one of the most useful rules of thumb is the 1% rule, right? It's a simple way to evaluate whether a property will generate enough rental income.
Exactly. So the 1% rule suggests that a property should rent for about 1% of its purchase price each month. For example, if you buy a property for $200,000, you'd want to aim for at least $2,000 in monthly rent.
That sounds straightforward. But what if the property is in a market where rents are lower?
Good point. In that case, you might have to adjust your expectations, Maybe look for properties that have potential for value add opportunities, like renovations, which can help bump up the rent.
Right. And that leads us into the 50% rule. It's another great guideline to keep in mind when considering your expenses.
Absolutely. The 50% rule suggests that you should budget about 50% of your rental income for operating expenses. So if you're bringing in $2,000 a month, you'd set aside around $1,000 for things like maintenance, property management, and utilities.
That makes sense. And it's a good way to make sure you're not overestimating your profits.
Exactly. And when you're looking at potential properties, it's crucial to have a deal evaluation checklist.
What kind of things should be on that checklist?
Well, first, you want to assess the property's location. How's the neighborhood? Are there good schools, amenities, and access to public transport? Then, look at the property condition. You might want a professional inspection to uncover any hidden issues.
That's key. And what about financing options?
Financing can really make or break a deal. You've got conventional loans, which are great but can require a hefty down payment. Then there are FHA loans, which are easier to qualify for and require less down.
What about using equity from existing properties?
Yes, that's a smart move. If you have equity in your current property, you can tap into that to fund your next investment. It's often called a cash-out refinance.
I see. And it's important to keep in mind the interest rates, right? They can really affect your cash flow.
For sure. With interest rates fluctuating, locking in a fixed rate can give you peace of mind. Just make sure to do the math. Calculate how much your monthly payments will be and how it fits into your overall budget.
And let's not forget the importance of property types. Residential properties are usually easier to manage for first-time investors, while commercial properties can yield higher returns.
Right, but they come with their own sets of challenges. The tenant turnover can be higher, and the economic cycles can impact them more dramatically.
Good point. And markets can vary widely, too. Some areas might be booming, while others are stagnating.
Exactly. Keeping an eye on market trends is vital. Look for indicators like job growth, population growth, and infrastructure development. They can signal a strong market.
So, to sum it up, knowing your numbers and having those solid rules of thumb can guide you in making informed decisions.
Absolutely. And remember, being adaptable is key. Sometimes a property might not fit perfectly into the 1% or 50% rules, but if the area is growing and you can add value, it might still be worth pursuing.
That's a great takeaway. Now, what are some common pitfalls investors should watch out for?
One of the biggest pitfalls is underestimating renovation costs. It's easy to think you can handle a quick fix, but costs can spiral quickly.
Oh, I can see that happening. And what about over-leveraging?
Yes! That's a crucial one. It's tempting to take on more debt to expand your portfolio, but if the market shifts or you face unexpected expenses, it can lead to serious financial strain.
And I imagine not doing enough due diligence can also backfire.
Definitely. Skipping that inspection or not researching the neighborhood can lead to costly mistakes down the line.
So it seems the key is to stay informed, be cautious, and have a solid strategy in place.
Exactly. And don't forget to network with other investors. They can offer insights that you might not find in textbooks or online.
That's a great reminder, Mike. Learning from others, experiences can save a lot of headaches.
For sure. And keep those communication lines open with your contractors and property managers too. Clear expectations can prevent a lot of miscommunication and issues.
This has been such a valuable discussion. So many practical tips and strategies to consider.
Glad to hear that, Sarah. Just remember, real estate investing is a marathon, not a sprint. Patience and persistence are your best friends.
That's a perfect note to wrap this section on. Thank you for sharing all these insights, Mike. It really helps demystify the investing process.
So let's dive into some of the common pitfalls that real estate investors often run into, especially when it comes to material costs, right?
Yeah, I think that's super important. I mean, one of the big mistakes I see is over-leveraging. Investors get excited, they see potential, and they think, I can stretch my budget.
Exactly. It's like they forget that just because a property looks good on paper doesn't mean it's a sure thing. I had a client once who bought a property thinking they could renovate it on a shoestring budget. They over-leveraged by taking on more debt than they could handle, thinking the market would keep rising.
Oof, that's tough. What happened?
Well, they ended up needing to put in way more for renovations than they initially planned. And when the market took a dip, they found themselves in a really precarious position. They couldn't sell for what they owed.
Right, and that's such a hard lesson to learn. It's like, if you can't cover your mortgage because of unexpected costs, you're really in trouble.
Totally. And that leads us to another common mistake, ignoring cash flow. I mean, cash flow is king, right?
Absolutely. I remember talking to an investor who was all about the big numbers. They were focused on potential appreciation, but they neglected to run the numbers on cash flow.
Yeah, that can be a killer. I know of a case where someone bought a multifamily property thinking it was a gold mine because of its location. But when they got into it, they realized the tenants were paying way below market rates, and the maintenance costs were through the roof.
That's frustrating. So they were stuck with a property that wasn't generating enough income.
Right. And they didn't account for those hidden costs. Things like property management fees, insurance, and repairs.
Those hidden costs can sneak up on you, for sure. It's like you think you're making a sound investment, but then reality hits.
Exactly. And that's why it's crucial to do your due diligence up front. Spotting red flags early can save you a lot of heartache. Like, if a property has a high turnover rate with tenants, that's a big signal, you know?
Yes. High turnover can mean a lot of things. Bad management, bad location, or even just a property that's not appealing.
Right, and when it comes to bad tenants, it's not just about the rent. I've seen situations where tenants were late consistently, or worse, caused damage to the property.
That's the worst, and it can drain your resources so quickly.
Absolutely. And that's why I always say, do a thorough background check. Look for tenant history, get references.
And trust your gut. If something feels off, it probably is.
Definitely. And then there's the issue of timing the market. I think we've all heard stories of investors trying to time their purchase perfectly, waiting for the absolute bottom.
Oh, for sure. I mean, who hasn't tried to play that game? But in reality, it's so unpredictable.
Right. I had a colleague who waited too long to buy in a hot market, thinking prices would drop. But they ended up missing out on several good deals, and prices just kept climbing.
Yeah, that's a classic case of analysis paralysis.
Exactly. Sometimes it's better to just get in, even if the timing isn't perfect. If you have a solid investment strategy, you can ride out the ups and downs.
That's a great point. So, what's your advice for avoiding these pitfalls?
Well, I'd say start by having a clear budget and stick to it. Don't let excitement cloud your judgment.
And maybe build in a buffer for those unexpected costs?
Yes, always have a contingency fund. I usually recommend at least 10 to 15% of your renovation budget as a cushion.
That makes a lot of sense. And when it comes to cash flow, Running the numbers is key.
Exactly. Don't just look at potential rent. Factor in all your expenses and make sure the cash flow works from day one.
And vetting tenants carefully can really make or break your investment, right?
Absolutely. Take the time to find reliable tenants. It's worth it in the long run.
And if you find yourself in trouble, don't be afraid to ask for help or consult with a professional.
Yes, there's no shame in seeking advice. Sometimes a fresh pair of eyes can spot things you might have missed.
So it sounds like a lot of these pitfalls can be avoided with proper planning and due diligence.
Exactly. It's all about being proactive rather than reactive. And if something does go wrong, having a plan to pivot or recover is so important.
Great advice. So what's next?
Well, I think the next step is to really assess your current investments and see where you might have gaps. Are you tracking your cash flow? Are you prepared for unexpected costs?
And maybe even consider doing a refresh on your property management approach or tenant vetting process.
Yes, it's never too late to improve your strategy. With the right mindset and preparation, you can really set yourself up for long-term success in real estate investing.
Absolutely, Mike. That's so encouraging to hear.
Thanks, Sarah. I think we've covered some solid ground here.
Yeah, it's been super informative. Let's dive into some actionable steps for our listeners moving forward.
So let's dive into some immediate steps that our listeners can take right now to make the most of their real estate investing journey, especially when it comes to material cost hacks in 2026.
Absolutely. I think starting with a checklist could be really helpful. What do you think should be on that list, Mike?
Well, first off, I'd recommend getting familiar with some key apps. Tools like Zillow and Rentometer are great for assessing property values and rental rates. They can really help you understand the market better.
Right, and I love how user-friendly those platforms are. You can find so much information at your fingertips, but what about analyzing deals?
That's where the Bigger Pockets calculator comes in. It's a fantastic tool for analyzing potential investments. You can input your costs, estimated rents, and it'll help you see if the numbers work out.
Yeah, I've heard great things about that, and I think DealCheck is another good option for detailed property analysis. It's like having a mini financial advisor right in your pocket.
Exactly. And don't forget about your local MLS access. Getting in touch with a local realtor can really help you tap into resources that might not be widely available online.
Good point. Networking with real estate professionals can open doors. Now let's talk about habits. What small steps can listeners start with?
Well, I suggest analyzing one deal per week. Just pick a property, run the numbers, and get comfortable with the process. It doesn't have to be overwhelming.
That's such a manageable approach. And as you get more comfortable, you can start expanding your analysis to different types of properties.
Absolutely, and joining a local real estate meetup can also be incredibly beneficial. It's a great way to meet like-minded individuals, share experiences, and even find potential partners for future deals.
Plus, you get to learn from others, successes, and mistakes, which is invaluable. What books or podcasts would you recommend for our listeners?
Well, I definitely suggest the book on rental property investing by Brandon Turner. It's a solid foundation for anyone looking to dive into real estate. And for podcasts, Bigger Pockets Podcast is a must-listen. They cover a wide range of topics that can really inspire and educate.
Those are great recommendations. I think incorporating a bit of reading or listening into your weekly routine can really boost your knowledge and confidence over time.
For sure. And don't underestimate the power of starting small. Even if you just dedicate 30 minutes a week to learning or analyzing deals, it can really add up.
Right. Consistency is key. And speaking of starting small, what about budgeting? Should they consider setting up a separate account for their investment funds?
Definitely. Having a dedicated account for your investment funds can help you track your expenses and profits more accurately. Plus, it keeps your personal finances separate, which is really helpful.
That makes total sense. It's all about creating those small systems that make investing more manageable.
And remember, it's okay to make mistakes along the way. That's part of the learning process. Just keep moving forward and don't get discouraged.
Exactly. Each step, no matter how small, is progress. So with these tools in your pocket and some practical habits to implement, you're ready to take action.
Yeah, it's all about taking that first leap. So let's recap what we've covered today. So as we wrap up, let's quickly recap some of the key takeaways from our discussion on material cost hacks in 2026.
Absolutely. First off, we talked about the importance of staying updated on market trends, right? It really helps in choosing the right materials at the right time.
Yeah, and then there was the tip about bulk purchasing that can save a ton in the long run, especially if you're working on multiple projects.
Right, and don't forget the value of networking with suppliers. Building those relationships can often lead to better deals and insider information.
Exactly. And we also discussed the impact of sustainable materials, not just on the environment, but they can actually be more cost-effective over time.
So true. It's all about being smart and making informed choices. I think if listeners keep these strategies in mind, they'll definitely see some positive shifts in their investing journey.
For sure. And remember, building wealth through real estate isn't just a dream. It's a journey. It takes time, patience, and a willingness to learn.
Yes, and every step you take, no matter how small, gets you closer to your goals. So don't hesitate to dive in.
If you found today's episode helpful, we'd really appreciate it if you could like, subscribe, and share your biggest takeaway or any questions in the comments.
And don't forget to share this with someone over 40 who's looking to invest in property. It might just inspire them to take that first step.
Next time, we'll be diving into some of the tricky permitting and zoning challenges that many investors face.
That's going to be super important info. We can't wait to share it with you.
Thanks for joining us today, everyone.
Yeah, take care and happy investing.